In an era marked by rapid technological advancement and globalized commerce, charge card systems have become pivotal in facilitating financial transactions. These systems, which encompass a range of activities from card issuance to transaction processing, play a critical role in both consumer and business finance. The efficiency and security of charge card systems hinge on various interconnected processes that ensure the seamless flow of transactions. This video delves into the critical components and systems processes involved in charge card transactions, analyzing their significance in contemporary financial exchanges. The evolution of charge card systems. Charge cards originated as a means to simplify purchases during a time when credit was not as widespread. Traditionally, charge cards required users to pay off their balance in full each month, a model that catered to users who sought convenience without incurring debt. However, the introduction of credit cards in the late 20th century revolutionized the ongoing evolution of payment systems. Today, charge cards coexist with credit cards marked by their specific usage scenarios and payment structures. Understanding this evolution provides essential context for analyzing present-day charge card systems. Card issuance and authorization. The first critical process in the charge card ecosystem is card issuance. This involves assessing an applicant's creditworthiness, a task usually undertaken by banks or financial institutions. Upon approval, cardholders receive physical or virtual cards equipped with unique identifiers and security features. The next step is transaction authorization, which occurs at the point of sale. When a consumer opts to use a charge card, the merchant's terminal contacts the card issuer to confirm whether the card is valid and if the transaction amount can be covered, ensuring that the system mitigates the risks of fraud and credit default. Transaction processing. Once a charge card is authorized, the actual transaction processing commences. This entails communicating with various parties, including the merchant, the cardholder's bank, and the payment network. A well-established payment network plays a pivotal role in routing the transaction request to the appropriate financial institutions. It ensures that data transfer occurs rapidly, typically within seconds, allowing for a time-efficient transaction experience. The back-end orchestration of clearing and settlement processes further strengthens the reliability of charge card systems. Fraud prevention mechanisms. Fraud prevention is an integral aspect of charge card processes. As the prevalence of electronic payments increases, so too does the sophistication of fraudulent activities. Charge card systems incorporate multiple layers of security, including encryption, tokenization, and biometric authentication. These measures enable card issuers to protect sensitive consumer information and reduce the incidence of fraud. Additionally, transaction monitoring systems equipped with artificial intelligence algorithms can identify anomalies in spending patterns, prompting further investigation of potential fraudulent activities. Billing and repayment processes. Through a charge card transaction is completed, it enters the billing phase. Cardholders receive timely statements that detail their expenses, due dates, and payment options. The repayment process is crucial, as it establishes the cardholder's financial discipline and credit history. Unlike traditional credit cards, charge cards typically require full payment by the due date, thereby promoting responsible spending. This model encourages consumers to engage in budgeting and financial planning, underscoring the broader implications of charge card usage on consumer relationship management. Customer relationship management, CRM, is another vital process within charge card systems. Financial institutions often leverage CRM strategies to enhance consumer engagement and loyalty. Through personalized offers, rewards programs, and responsive customer service, issuers aim to retain cardholders and attract new ones. These initiatives not only benefit consumers but also foster a sense of community among users, thereby enhancing brand loyalty and market competitiveness. Regulatory compliance and legal framework. Charge card systems operate within a framework of regulatory compliance and legal obligations. Financial institutions must adhere to various regulations, such as the Payment Card Industry Data Security Standard, PCI DSS, and the Fair Credit Billing Act, FCBA. These regulations establish essential guidelines for data protection, consumer rights, and dispute resolution. Compliance not only mitigates legal risks but also promotes consumer trust in the charge card system, which is crucial for its sustainable growth. Future trends and innovations. Charge card industry is at the cusp of further transformation, driven by technological advancements such as artificial intelligence, blockchain, and mobile payments. These innovations promise enhanced security, faster transactions, and improved user experiences. For instance, the integration of blockchain technology may facilitate more transparent and efficient transaction processing, while advances in AI could lead to smarter fraud detection mechanisms. Understanding and adapting to these emerging charge card system, often characterized as a precursor to modern credit card systems, emerged in the mid-20th century, marking a significant shift in consumer purchasing behavior. This system facilitates transactions between cardholders and merchants by allowing users to charge purchases and pay the balance at a later date. An investigation into the processes inherent to charge card systems reveals their operational framework, their impact on consumer behavior, and the challenges posed by such financial instruments in contemporary markets. The core of the charge card system is its operational structure, which typically involves three primary entities: the cardholder, the issuing bank, and the merchant. The cardholder uses the charge card to make purchases, thus entering into a contractual obligation to pay the bank, which in turn compensates the merchant for the transaction. This triadic relationship forms the foundation of financial interactivity in a charge card ecosystem and highlights the importance of trust and reliability in these transactions. Cardholder must be confident in the institution's ability to safeguard their financial data and manage the repercussions of late payments or defaults. Processing a transaction through a charge card system unfolds across several stages. Initially, when a cardholder makes a purchase, the merchant's point-of-sale system communicates with the card issuer's authorization network to verify the card's validity and the available credit. This real-time communication is crucial, as it determines whether the transaction will proceed. If the transaction is approved, the merchant completes the sale, providing a receipt to the customer, and the issuer records the debt owed by the cardholder. The efficiency of these processes is paramount, given that delays could deter consumers from using charge cards. The billing cycle represents another critical aspect of the charge card system processes. Through a designated period, typically monthly, the issuing bank sends a statement to the cardholder detailing the purchases made, total outstanding balance, minimum payment required, and the due date. This cycle not only serves to remind the cardholder of their financial obligations, but also plays a key role in influencing their spending behavior. Understanding the intricacies of billing cycles can empower consumers to manage their finances more responsibly, effectively working within the lending limits imposed by charge card. The interest rates and fees associated with charge cards introduce further complexity into the system. Many charge cards operate under a pay-in-full rule, meaning that cardholders are required to pay the total amount owed by the due date to avoid incurring charges. However, for those who fail to comply with this requirement, high interest rates and late fees can accumulate quickly, creating a cycle of debt that is challenging to escape. This showcases the duality of charge cards as both a convenient financial tool and a potential source of financial strain, complicating consumer attitudes towards spending and credit. Moreover, the charge card system operates in an evolving regulatory environment, which seeks to protect consumers while maintaining a sustainable financial ecosystem. Federal regulations such as the Truth in Lending Act aim to ensure transparency in lending, requiring issuers to disclose information about fees and interest rates. These protective measures empower consumers by informing them of their rights and responsibilities, fostering a fairer transaction environment. However, regulatory compliance can also place burdens on issuers, who must navigate a complex landscape to maintain their operational soundness while adhering to these legal standards. Technological advancements have further transformed the charge card landscape, with innovations in mobile payment systems and contactless card technology enhancing transactional efficiency. These improvements not only streamline sales processes but also support consumer convenience, enabling quick and easy payments. However, as these technologies advance, so too do the risks associated with data security and identity theft. Charge card issuers must invest in sophisticated fraud detection systems and cybersecurity measures to protect consumer data, balancing innovation with security protocols. The lessons learned from charge card systems are essential as consumers adapt to the evolving financial landscape. Responsible usage of charge cards not only fosters financial acumen but also cultivates habits beneficial for credit building. Educating consumers on the implications of carrying a balance, understanding interest accrual, and strategies for maintaining good credit score highlights the need for financial literacy programs. As consumers become more knowledgeable about charge card processes, they can make informed decisions that positively impact their long-term financial health. Lastly, as the charge card system continues to evolve, it faces challenges related to inclusivity and accessibility. Not all consumers have equal access to charge card systems, and socioeconomic factors can influence a person's ability to secure a charge card or maintain a credit. Thanks for watching. If you found this helpful, don't forget to like, subscribe, and hit the bell so you never miss a money tip. Drop a comment below with your thoughts or questions. I'd love to hear from you. Until next time, stay smart, stay savvy, and keep building your financial future.